think now we're
Sure.
going to go on to the next item, which is David is going to talk about some of the new CRA directives. David Sabina from UC. Starting on the financial side with the issue of experimental versus commercial production, CP versus EP, and good old CPED. So with that, David, please take it away.
Thanks, Earl. So one of the many things that I've found happening recently is that the CRA has begun to develop its own policies, I would say, almost on a regional basis. So that you'll see, as we indicated for the medical practitioners, that we have basically. Is someone scrolling my slides? If they could stop that, please. So basically, what we have is a situation where these CRAs come in and created, I guess, policies that may be inconsistent with the legislation itself and prior tax case precedents. And some of the issues here are not only the rules itself, but what are the methods to deal with this? Why are these papers coming out? Who's really reviewing them before they get implemented as policy? And what's the rationale within the CRA and Department of Finance to continue this process, and how should stakeholders be involved? So the first thing that I'm going to look at is basically a sample fact scenario for what we call commercial production or experimental production. And I've seen this over and over again in a typical response, or almost a verbatim cut and paste response. So the sample fact scenario is that a client develops a set of prototypes and then tests them in a commercial setting. So this involves machine operators or something of that nature. Generally speaking, all the work will be accepted by the CRA as eligible SR&D work on a project level, but the operator time for the related testing will be denied if it's done on a commercial site as opposed to if it's done on a purely experimental site. And there's numerous statements, but a sample, or I've combined together a variety of things that the CRA has responded to, or my clients. And I think the following statement really sums up their position on it. They say, quote, "The claimant must demonstrate that the intent of the work was solely for SR&D or support that the work was experimental production. The research and technology advisor explained that the work is performed in a commercial facility that results in commercial products may be experimental production, but it is the claimant's requirement to show it was undertaken to develop technology and only resulted in a commercial benefit as a consequence to the EP. The opposite appears to be true in this case, as it seems the company chose to test during normal commercial operations to reduce the expenses of the testing. The technology manager added to the explanation, stating that experimental production requires risk to the commercial product being identified. He added in the case, work was never at risk of meeting commercial expectations." Okay, so what we've got here is I'd say a confusion of business risk and technological risk. What effectively they're saying is if someone is willing to pay for a product or service, then there could be no technological risk. And again, those should be totally incongruous. However, this policy started to evolve over the last couple of years, and we can kind of trace how it happened, I think, by going through various guidance documents. And one of the main problems is back in 2012, the various guidance documents for the CRA were replaced with new guidance documents. And in many ways, they were brief. And I would say in other areas, as we're going to illustrate, they're very ambiguous. And this high level of ambiguity is what's causing these problems and this high degree of misinterpretation. And I believe that these papers could be vastly simplified or greatly simplified and tuned to the spirit of the legislation. So the first thing they talk about is a paper on salary or wages. And what does directly engaged mean? Because this becomes important on determining, is an employee directly engaged, and if so, are they involved in the SR&D? So the CRA in its own paper talks about tasks by non-specialized employees, including machine operators that could be directly engaged. So you say, okay, that's a positive indicator. They then talk about experimental production as any production that's needed or required to verify whether the objectives of the project have been met. In other words, whether we're still resolving the stated technological uncertainties or the uncertainties have been resolved. And that's always been a very clear definition. When the stated technological uncertainties in the description appear to have been resolved, then the project moves from the experimental stage into the commercial stage. If the project continues to maintain technological uncertainties, even if the output of the production might be sold, up until now, that would still be experimental production because it was always the science that should drive the claim. Whether someone would buy it or not was completely irrelevant. That's a financial aspect that has nothing to do with the science. I often like to use the ridiculous argument of if I was to build a time machine and someone were to pay me to do this, CRA's argument here would be, well, that's clearly commercial. There could be no technological advancement involved because someone's paying you to do this. And of course, that's a ridiculous argument, but I'm saying that in my position, the CRA's got a ridiculous position here, so very fitting. Okay, so to go on and on, there's then papers released on shred in production policies. And this just came out in 2016. And it talks about experimental development and experimental production. And it's basically saying that for it to be experimental production and experimental development, there could be no simultaneous commercial work occurring. Right? They then go on to a concept of for it to be experimental production, there has to be technological risk is a new term that they've developed out of somewhere for the product or process. So again, they then go on a little further to talk about not only does there have to be technological uncertainty on whether the objectives of the new product or process can be obtained as evidenced by specific variables or issues or hypothesis. They're actually saying that on top of this, there's a new consideration called technical risk, that the product itself may become unstable, there's a negative impact. Basically, they're saying, well, if what you're doing is so dangerous that you could blow it up or wreck the machines, maybe it could be SR&D, but if there's not a significant risk of some kind of failures, it's not. So basically, we've got a bit of a convoluted argument where you say, well, maybe stuff could be in, or maybe it's not. If we're uncertain on how the experiment will impact the process, well, that sounds like technological uncertainty. So they're saying it could be in. But in practice, when it's being applied, as we said from our fact scenario, they're generally saying, no, it has to be purely experimental. And if anything's sold, then the financial aspects will drive the claim, and we're going to forget about the scientific aspects. So normally, when I discuss a case like this, I do it the way they taught me back in the 1990s when I did the in-depth tax course. And what they said was that when you study any law, you're supposed to look at the legislation first. What did our elected officials say? The people that you and I voted for who passed this legislation, got royal assent, and allowed it to become law in the future because it represents what the people want. Then it's handed to the Canada Revenue Agency kind of as a police officer to interpret and enforce this legislation, but really not to create their own legislation. So what the Act says is, and I won't go into the full definition of SR&D, but it's a systematic investigation or search, and it involves 8 specific activities that, as long as they're commensurate with the needs and directly in support of the project, i.e. they're needed to achieve the objectives or resolve the uncertainties, they're in. So they talk about engineering, design, operations, research, the obvious ones, mathematical analysis, computer programming, and also data collection and testing. So this is really where the kinds of operations that we're talking about happen. If we develop a new product and we want to test it, or a new prototype, we may need machine operators or specialists to operate that machine to see that, in fact, the prototype works. So the Act clearly contemplates that data collection and related testing is clearly part of the SR&D project. There's been several court cases over the past 20 years, and they happen about every 10 years. I remember talking to my late partner about this issue back in the 1990s, and when we were faced with exactly the same problem that we're facing now, and saying, you know what, why doesn't the CRA learn from the court cases? And his response was that the CRA doesn't really read court cases, and they need to be reminded at least every 5 to 10 years. So I'm going to go through 20 years ago, 10 years ago, and where we are now, and I think what we need is another case to remind the CRA that the law is crystal clear on this issue. Okay? Back in I guess the late 1990s, there was a case called Cultures La Flemme, where the company developed experimental mushrooms. They spent about $120,000 on this, and they sold the proceeds of experimental production for $130,000, and the CRA basically applied the proceeds of disposal to the costs to say, well, because you sold the product, you didn't incur the cost. And really, the Section 37 of the Act says you get SR&ED credits based on expenses. There's absolutely nothing that says you offset expenses with sales or you reduce the expenses. The Act contemplates that there's revenues and there's expenses, and those are completely different. They don't negate each other. But the CRA's proposed position, and I would say this is indicative of the mindset that I see of the people applying this, is that the tax credit should be available only to those who cannot finance scientific research without proceeds of disposition. They actually talked about the principle of matching in accounting. So the CRA and the Crown's position on this was that the principle of accounting principle of matching revenues and expenses is relevant here. And in the court case, the claimant correctly countered that there's absolutely nothing in the Income Tax Act that requires you to reduce the expenses for SR&ED by proceeds of disposition, other than something called a contract payment, which is where you receive a payment from another Canadian company who's claiming those exact same expenses as SR&ED, i.e. they file under that part of the Act. Okay? There's no other provision that ever says you take the proceeds of disposition and put that in. Okay? So basically, the judge concluded that the sums received from the sale of experimental production do not in any way have to be deducted from the cost. Okay? Now, about 10 years later, an almost identical situation came up in the case of Consultex. This was a company manufacturing textiles that did, again, experimental development and production and sold the results of its experimental production. The Canada Revenue Agency's approach in this case was to take the full proceeds of disposition and, again, try to apply them against the cost, saying, well, if you sold it, there could have been no technological uncertainty. And basically, the judge took the same position as in the case of Cultures La Flemme, that the expenditures themselves are what give rise to the ITCs. The revenue created from that, if it generates profits, will generate taxable income that will generate taxes. But that's not contemplated with the Income Tax Act. The Income Tax Act provides the ITCs on the basis of expenses. He basically reiterated that it runs counter to the entire philosophy of fiscal incentives, whether in the form of SR&ED allowances or ITCs, to say that if an expenditure giving rise to the incentive results in a potential income, they should be watered down. So again, the courts are crystal clear on really what's happened here, and they've given clear responses and clear directions to the CRA, and yet papers like this and positions like this continue to develop. And sadly, when I try to negotiate this with the district heads and mention that, hey, there's other cases, can we talk about this? Not only is there not an open conversation, but they're actually vehemently angry at me for daring to quote court cases. So again, there's a very little willingness, I'd say, on this issue of the CRA to consider any possibilities. There's very little direction from Ottawa, if any, and sadly, the only recourse I see for the taxpayers is to again, take this issue to court. Now, what I'm saying is in my view, short-sighted of whatever CRA officials are creating these new laws inadvertently, is that they really don't understand the principles on how shred wages and the related ITCs work. And effectively, it's what we call a hedge transaction from the Department of Finance view. What that means is the only way you can earn more SR&ED ITCs is to pay more salary and wages to Canadian employees, and the taxes that you earn on the salary and wages are generally in excess of whatever ITCs you would pay. So effectively, the system funds itself. If you're going to pay your employees more to earn more ITCs, that's effectively going to create more taxable income to them, which is going to put more taxes in the CRA coffers. To illustrate this, we'll look at the federal personal income tax rates for 2017. It's 15% on the first 45,000, 20% as you go up to about 90,000, and then it very quickly gets over with surtax over 30%. Okay? If we look at the types of claims, the majority of claims in 2017, out of 22,000 claimants, roughly 6,000 of those were non-refundable clients, the 15%ers. So the employee would probably pay 15 to 30% marginal tax on federal tax on their income, and at most the company's going to get 15% of that back. So again, the CRA is coming ahead of the transaction in its tax coffers of the Department of Finance. Now there are refundable credits, but they represent roughly 40% of the total claimants. So again, what we have here is a transaction where there is no offense by allowing eligible testing under the Act to be paid if the salary and wages are paid to a taxable supplier, which is basically a Canadian employee or a taxable Canadian contractor. And again, I guess one of the issues here is that these policies are in place and they're being enforced, and they really are contradictive of the law itself. So these papers are out there, and I don't really find any recourse of anyone in Ottawa or any district manager or head who can deal with this. And when I speak to them about why don't we go to Ottawa and talk about the issue, my response is effectively there is no Ottawa. They will not get any direction on this, and each district is now required to make its own decisions. Again, leading to the inconsistencies from district to district that other practitioners have mentioned, and which I find very concerning as a practitioner myself. Okay, on this issue, I'm going to wrap that up and then leave it up to any questions, if there's any questions in the audience, and maybe take about a 5-minute break, and we'll start the next session.
Thank you.